A newbie wants to invest, a Gen Z wants to invest, alright, teenager, fresh out of school, has only 2000 rupees in his pocket, but wants to become an investor and learn something out of it. But they'll have to start from scratch somewhere. So let's talk about those people, grassroots level learning of it. So they want to stick their foot in the door. How should they start? Greetings and salutations, everybody. This is Dr. Reuben Singh, and it's my first podcast with Mr.
Ishmeet.
So we are going to talk about stock market today, and we'll see how it goes. We'll try and have our fun, and we'll share, of course, you will share your knowledge regarding stock market today, and maybe our audience will learn something out of it. So could you brief us about yourself?
So hi, my name is Ishmeet Singh, and I am currently pursuing my final year of Bachelor's of Management Studies, and I started my stock market journey about 2 years ago, and till then I have learned a lot of things, and today I will share my experience as much I learned, and I will try to educate people who are watching this video as well.
Alright, so what was your motivation? When did it occur to you that you wanted to be a stock marketer?
So from very beginning I was really good in maths and numbers. So when I was in 12th, so there is a chapter in business study that is financial market. So from that I got a kick that yes, I should invest in that, and it was like a COVID year, so I had a lot of time to have some good research after that. And the problem was that in my family there is no one that really invests in stock market, so it was like a new beginning for me. And you know, Indian parents have that thinking that it is really risky, you should not invest it is a manipulative game. So it was a hard journey because I have to convince my parents first, ask for capital, then I started my journey. So it was like 6 months of convincing, then after I started my journey.
Oh, I see. So in fact this was going to be my question as well. Do you think this REIT estate is a safe place to invest?
People think that yes, real estate is a safer place, but I think if you want to earn good returns, just like in future and options, you can earn even 3 times of your money if the market is going really well and in your favor as well. In real estate, there is a problem of liquidity. If you want to sell your property tomorrow, then you won't have any buyer to purchase it. But in stock market, if you are selling your stocks, then you can sell it on the same day and you can receive that money on the same day as well. So it's just like if you want more liquidity, if you want more returns, then it's a good market. But in real estate, people they love, especially when they want longer returns and they want to invest in long time. So then real estate is good, but you can invest in stock market in shorter term as well.
Alright, but don't you think in real estate, if you invest and you keep that money, say for some time, say you leave that investment for a year or two, you will definitely make some profit out of it. However, this is not the case with stock market or REIT estate. What do you think?
So I partially agree that in real estate you have quite good profit, but in stock market, if you compare the last 10 years property rate and the last 10 year return of the HDFC stock, which is a good blue chip stock, so you can see the difference there. So you can earn more profits in stock market, and especially in real estate there is a thing that you have to keep your money for long term. But in stock market, few days back it was like railways and shipping stocks were really booming, and people earned double the money, double the profit in a single month. So it's just like you can earn good profit if you know how to deal with the market and how to select the stocks.
But what about its volatility? You don't necessarily make money. It fluctuates up and down. It can be bullish, it can be bearish. What about that?
So you have to think from both the perspective. So you don't need to be a fully buyer or fully seller in the market. You should be really adaptable to the market. And if the market is going good, if it's really bullish, then you should buy the stocks. And when you see that market is really bearish, then you should sell your stocks. Or you can buy the put commodities as well. You can earn money from that as well. So it's just like you really need to be adaptive if the market is really volatile, and if the market is volatile, then obviously if you think that market is really fluctuating, then you can earn more profits from that market as well.
Alright, what is your suggestion for a newbie?
So everything requires a lot of time, a lot of dedication. So if you learn from the books, that's a good thing, but if you will not have any practical exposure to that thing, then obviously you won't be able to learn that market. So my main thing was that I started my journey with a little money, And when you see your money is getting downer day by day, then you think that where I was wrong. Then you try to improve yourself. So I started with a little money, and from that money I learned from past 2 years.
I see. So, can you learn from books, or is it a game of hit and trial?
No, no. You should have proper knowledge. You should know what is fundamental. You should know what is technical. You should know the fair price of the stock. You should know the demand and supply of the game. You should know the indicators. So it's just like you should learn all these stuffs, and before investing, you should know some of it. And while you are a player in the game, you will learn more.
Okay. Would you be comfortable sharing some of the fundamentals and technicalities of stock market
So
with, say, our first time watchers?
So when I started my journey, I made a mistake that the companies that our family was trusting, just like my father was in Bharti Airtel. So my first stock was Bharti Airtel, and at that time it was like the market was just recovering from the COVID. So it was like I bought it at really cheap, but I sell it at a huge price. So it was like a good profit, although the capital was not that much high, but if I would have bought that share when it was really overpriced, then I would have made losses as well. So I think for the fundamental, you should look at the debt equity ratio. You should look at the market leaders. You should compare your stock with the industries as well. You should look at the economy as well, how it's performing, how the other stock market, just like how US market are performing at that. And you should look at the macro factors as well, just like inflation rates, GDP. So these are the some fundamentals that you should look. And for the technical, you should see the support and resistance. You should see the indicators where they are matching. You should see the RSI where it is overpriced or underpriced. So these are some technical that you should see before investing in any stock.
I see. So, say there is somebody who wants to invest in stock. He's a stock market enthusiast. Okay. But he has only pocket money in his pocket, say 1,000 or 2,000 rupees. How do you think he should initiate? What would you suggest?
I think that's the beauty of stock market. In real estate, the main problem is you should have a lot of money to invest in the property.
Yeah, that's true.
But if you want to invest in a normal penny stock, just like if you want to invest in a railway stock, then you can buy a single stock for 150 rupees as well. You can buy a stock for even 2 rupees as well, or you can buy the stock for 1 lakh rupees as well, as we see that MRF just crossed 1 lakh rupees. So it's just like if you have less capital, then you should buy less quantities or prefer those shares that are really not expensive or in your pocket as well. So if you are a new person, then try to analyze the sectors as well, and after that you should invest how much money you have according to that.
Now let's teach them, say, from literal start, ABC of it.
So firstly, if you have interest, then it's good, and after that you should look at your pocket as well. So there is a saying that don't take any debt to invest in the market. So don't take your debt. It's like if you even have 1,000 rupees, then start with that 1,000 rupees. Then try to read more books, try to read more articles, try to listen to the more podcasts or YouTube videos.
Could you suggest some books or some articles?
Rich Dad Poor Dad is the first book. You will get to understand the perspective of the Rich Dad and the Poor Dad, which is a very famous book. And secondly, the book I read was How I Made $2 Million in the Stock Market. So it is a really amazing book because it not only tell you his experience, but how he started in his 1970s and how he make a lot of money, although he lose a lot of money during that time, but he finally was able to achieve a lot of money at that time. And if you want to look at more books, then you can have books easily from the PDFs, or you can look at the Kindle as well. So there are a lot of stuff, but you need to research on that. And for the YouTube or content, you can watch AK Madan, you can watch Trader Parasite. So there are a lot of traders who just give you the calls as well and give live trading as well. So you can follow them to have more knowledge about that.
I see. And what about your own portfolio?
So
could you give us a gist about your own portfolio?
So it's not that much of
what if somebody just wants to copycat you and make money out of stock market?
So my perspective is just that you should diversify your portfolio, because obviously if you're gonna keep your money at one basket, then obviously the chances will be more, the risk will be more. So it's just like you should diversify your portfolio, in a single sector. If you think that pharma is good, then you should invest in pharma, but you should see the other things as well. If the hospital sector is going good, then obviously the food sector will also will be really good, because the canteens will be there, then medicines will be there, the customer will be there. So you should take a proper structure. So it's just like, it's a beautiful example. If a government gives a contract to the road, so the obviously cement industry will be affected. If there are restaurants opening at that time, then obviously FMCG industry will be affected. If their network towers are required on that highway, then obviously telecom industry will be affected. So, and there will be more cars on the road, the people will try to buy more cars, then obviously tires, car industries will be more affected. So it's just like, you should see the roadmap, how a single decision can affect not only single industry, but all the other industries as well. So you should see the pros and cons of each and every industry.
So we will have to read the company's portfolio before building our own. Is this what you're suggesting?
So there is an approach called EIC approach, which is an economy, industry and company approach. So first of all, you should see the economy, how it's going. If obviously in 2020 no one was buying the stocks, obviously who just buy the stocks were in losses. Instead you buy Adani's or pharma stocks. So you should see the economic factor as well, inflation's, GDP, employment rate, or the reports from the World Bank or the RBI. So you should see that. For the industries, if the industries news is getting good, then obviously not a single stock, but all the other stocks will be affected. If there will be more subsidies on the tires, then not only MRF but the all players who are in the tire industry will be affected. Not only tire industries, but car industries, the rubber industry will be affected. And the last one is the company analysis, where you look at the financials of the company, you look at the micro factors, how company is performing, about the reputation and goodwill. So it's just like, you should see these three factors before investing in any company.
I see. And real estate investors, they give an argument that firstly it is safe returns, and second of all they say apart from the returns that you get on investment, you also get fixed monthly rental income. So how would you counter that?
So yeah, it's like a safer invest, but if you want to play safe, then you can buy ITC stock as well. It give you a yearly dividend as well. Or talking about the dividend, there is a stock of Vedanta Limited who gives 43% of their earnings as a dividend. So you can earn dividend from the stock market as well, and for the safer returns you can go for those stocks who's constantly performing really good. And for the real estate, it's not like it will grow.
And how would one know which one is performing good?
You can see the company's financials, you can see the industries, how they are working, you can see the how government is
Let's say
reacting.
a newbie wants to invest, a Gen Z wants to invest, alright, teenager, fresh out of school, has only 2000 rupees in his pocket, but wants to become an investor and learn something out of it. But they'll have to start from scratch somewhere. So let's talk about those people, grassroots level learning of it. So they want to stick their foot in the door. How should they start?
So I will tell my experience that how I started.
Now
So
that
it
would be a
was,
good idea.
so
Maybe
it
they'll
wa-
learn something from the experience.
Yes, so it was like, I invested at a different time where the market was recovering from the COVID-19, and if someone is investing, then they should know that how market is reacting. Although I didn't look that, but I was quite of lucky that it was recovering. The stocks were at really at discount rates. So you should look at the market, how they are fluctuating, and before investing in the market, you should not just see that it's a hit and trial method. You should look at the investments as well. If talking about the real estate, they also see the property rates, the area, the people, the locality as well. So it's just like the same in stock market. You should see their companies, their industries, their inflation, how government is trying to improve that. So few months back, government was trying to improve the PSU and the small finance bank. So that news really affected the stock market as well. So you should be aware about the news or the repo rates as well. Just like few days back, repo rates was unchanged for 6.5%. So obviously it will affect the bank sector. So be aware about the news. Try to be more active for the current affairs or the financial news as well. So if you want to be a part of stock market, then you should learn day by day, not from the books but from the YouTubers. You can even watch the podcast as well, how they started. So it's just like gaining something from their experience, and you can add them in your experience as well. So for a newbie, it was like you should learn day by day, because if you even have money, then obviously you don't have knowledge how to invest that.
Yeah, of course.
So you should have, or you should gain more knowledge so that your money wouldn't be more that risk, because you don't want to see your portfolio in red, you always want to see your portfolio in greens. So for that you have to work really hard, you have to give your time, as I mentioned earlier, you have to give your dedication, you have to give your time, because if you give your time to the stock market, then stock market will give you returns, and vice versa.
Okay, so bottom line, knowledge is money in stock market.
Knowledge is money and time is money.
Time is also money. So one
Yeah.
should always keep Financial Times newspaper handy.
Yeah, you
And read
can
it
look.
as
You
a
can
source of
even look at the in-shorts as well, or you should be aware about the companies as well, how they are performing over the past years. It's not like you always go to the reputation, but few months back it was like Adani Hindenburg case, and at that time Adani stocks were going really down. So if at that time, if a newbie wants to invest, then obviously you don't have that knowledge, then obviously he wouldn't be in loss if he buys Adani. So it's just
yeah.
like you should be very aware about the newses, all the reports that are coming from the World Bank or the RBI. So it's just like you should be more aware about the markets.
And how do you think stock market has been invested by this recent COVID-19 pandemic?
So
Has it really recovered from COVID-19 tremors?
So it really recovered, and you can see the other markets and the Indian market. If you will compare it, then you will see that US markets were really down last year back, and Indian markets were really up. And on the September mid, exactly on 15th of September, the market closed over 20,000, which was like the history. And we know that if market goes up, then obviously people will start selling their stocks when they see good profits. And after that, market went down to 19,300, and from that it is really recovering and coming at 19,650. So it's just like it's a game of demand and supply, and the buyers and sellers. If you demand more, then obviously the price will be more. In real estate, the game is same. If you demand more for the property, then obviously you have to pay the premium of that. And if you want to sell, then obviously you have to look for the buyers. If someone is buying, then you will sell your property or your stock. So it's just like game of demand and supply, and it will fluctuate over time to time.
Okay. And many protocols, argue against stock market investment, that it's a gamble, one should not indulge into it. You can become an addict, and most of the people incur losses only. So you can in fact become bankrupt while hoping to gain profits or make money in profits. Only a small fraction of people make profits, majority suffer losses. Do you agree with this statement? If you do not, how would you counter that?
I don't agree with this statement that all of the people make losses, but there is a game of future and options, where it's just like if you'll take more risk, then obviously the amount of money you will gain is more, and the same with losing money as well. But if you're an investor, if you're investing in the company, then obviously it's just like if the company will perform good, then your stock price will go up, your dividend will go up. So it's just like you should invest in the company, not on the reputation of the company. So few months back, HDFC stock was merged with the SDFC. So after that, the market, his stock was going really down. So it's just like you should be aware about the news, and if you're sticking to the particular stock, then you should stick, because the financials are really good. Sometimes you will see the stock going down because they will be available at the discounts as well. So if you're thinking that going down of a stock is not is bad option, then I don't think it's a bad option. It's a good option, because you will get that same stock. Earlier you were getting at 2,000 rupees, now you're getting at 1,800 rupees. So it's just like if you're a good investor or big money investor, then you can buy more shares, and from that you can earn more profits as well. So it's just like going market down and getting recovered. It's a game. In a real estate as well, each and every year market will not go up. Sometime it will face losses as well. So it's just like you have to wait for the right time to buy and to sell. It's a time game and the demand and supply game.
I see. So well, I feel convinced and persuaded. So say I want to invest in stocks now, and currently of course the market is closed. Tomorrow of course it will again be closed. But Monday, where should I put money?
So
suggest me a stock I should put my money in.
So yeah, there is no such particular stock that I can recommend, because even I don't know the market will. We can predict the market, but talking about the company, it's not that easy to predict if it will go up or down.
Still consider saying a name.
So I will say a sector, two, three
Say
sectors.
Monday, the first thing I want to do is put my money in some stock. Which one should I buy?
You can buy Reliance, you can buy Infosys, because in these stocks the returns are higher but the risk is really down, and it totally depends on your mindset, that if you want high returns then obviously you will buy that stock that have more risk. But if you want to play safe, then you will try to buy Reliance, which has market leadership in all over the India. So the chance of going down of Reliance is really hard, instead of a small finance bank which can be shut down in next day as well. So it just depend on your risk capability, how much you want to risk your money. So it
Okay.
depends on
So
you.
there are safe games in stock market too. It's not completely risky, is it?
No, you can play safe as well. You can buy blue chip stocks. Blue chips mean the market leader stocks as well. You can even invest in Nifty Bs, which is a portfolio of Nifty 50. So it's like how Nifty behaves, like Nifty Bs behave. So you can play safer in the market, but if you want to risk your money, then obviously the risk of losing your money will be high.
So it is not a complete blind gamble like many people think. It is more of a calculated gamble. Huh? If you do your math right, if you do your calculations right, and if you do your predictions right, you can make money.
So there is a difference between investment and gambling. In gambling, you have the 50-50 chance. It's just like you are saying that we're gonna have toss. If you will give 50 rupees, then it said I will take 100, otherwise you will lose 50. That's gambling. But in investment, it's not like that. If you're putting your money just like 50 rupees, then it will not become zero next day. It will remain 48, 46,
So those are
even
educated estimations.
Yes, there is a difference between investment and gambling. So we should not compare stock market with gambling. It's a proper investment in which you can even look at the company financials, and with that you can invest. So it's just like your trust, and you become the owner of the company as well, if you think like that, because getting a single stock is 0.1%, but you'll think that you are becoming owner because you are lending the money to the company at that price, and with that they will try to recover your money, and they will try to give you back as a dividend or with the price growth. So just like it's not a gambling, it's a proper investment where you have to need proper knowledge before investing.
Okay. Final question. How much money do you make on monthly basis in stock market?
So it's just like I'm not a trader, I'm an investor. So I have put my money. So I don't
Say from day one till now, how much money have you put and how much have you made yourself?
So from that I would have make around the 10 to 12% of returns after selling it. But now the stocks I am keeping, the returns would be like 11 to 12% only. So you are
Okay.
earning 11 to 12% annually.
So you have been getting annual for last 2 years.
You can say yes, 12.
Is it an average
12%?
12%?
12%, 11 to 12% the basic if you
Oh,
are
so-
investing in a good stock. So you
So it's
might
better than investing in fixed deposit in a bank.
fixed deposits is a worst thing. If I'm not saying that worst, but it's not a good option, because in FDs now you are getting 7%, but earlier you only get 5% or 6%,
But
because
12% is more than 7%.
obviously it's more than, if FDs will give 9% returns, then it's less than 12% obviously. And what they will do with your money, they will try to invest, they will try to lend your money so that they can earn more interest, and from that interest they can earn, and they can have that commission of 3 to 4%.
Banks will take your money, give you 7%, and then they will invest your money further, and they will earn 12% out of it,
More than 12%.
and they will keep the rest.
Yes, so it's if you are
So
taking,
why don't you play the game that banks play?
we can't play, because banks is a major player, and if personal loan is around 16 to 70% of it interest, if you go to the
Yeah.
bank today, they will minimum charge you 16%,
Ah, that's insane.
and for the fixed deposit you are getting 7%. And how banks make money? This is the same thing. You will keep your money in the FDs.
In the end, it's all
They will
about
give
earning.
your money to the people, and from that they will earn interest, and they will give your money back with the commission.
So they lend you your own money and they make money out of it.
Yes,
Why not become a banking sort of investor yourself?
you can't become the banker's game, because it's like a huge game, and you need a lot of regulations, because you need to have a contract with the RBI. And secondly, if you don't have a big name, so small finance bank, there is a chance that people take your money and won't give you back.
That
In
that
small
was
finance bank there is a thing, but in big banks they know that obviously they will recover their money anyhow. And if they lose 50
Right.
crores, then they earn that money from the interest as well. So there is a thing that you will have to risk your money in that as well. There is no 100% guarantee that you will recover your money. So they have big numbers, they know they have big customers. We can't be like HDFC Bank. If we will start today, then after 50 years as well, we won't be a HDFC Bank. So this bank game is a different game, but we can earn interest from the mutual funds or the stock market that will give you around 12 to 15% returns annually.
I see. Sounds interesting.
Yes.
So, yeah, all right. So, to sum it up, what would be your final suggestions?
So if you want to invest in the markets, be aware about all the stuff. Don't take debts, and take knowledge from the market so that you can use that knowledge to get more returns. So don't play blind games. Just trust the process. Time is money, knowledge is money. Then invest yourself. Then you will get the returns. And if someone wants to invest in the market, they can even learn from the books as well. And if you want to get real experience of the market, you can even invest your money in the markets as well. But don't invest your money without any prior knowledge, because it will majorly lose your money. So be aware about all the markets, and don't follow a single market, because single market is also dependent on the other markets. Just like US market, how US market will play, then it will depend on Indian markets as well. How Singapore market will play, it will depend on the Indian markets. And after 5 to 10 years, it will be reversed. How Indian market will play will depend. It will like how US market will play will be dependent on the Indian market how is playing. So earlier we are following the US markets, but after some year we will follow Indian markets for the US. So it's just like investing is a good game, and invest on that thing which can give you good returns, and those things you can trust. So don't put your money in those things that will lose your money, but try to invest your money where you can earn good profits as well. And that's all.
I see. It was pleasure having you here. Thank you for all the knowledge and fundamentals that you shared regarding stock market.
If you want to invest, you should invest, because you can earn good profits.
I am going to stay in touch with you.
For sure.
You will be my investment banker now.
Sure.
All right, dear enthusiasts in stock market, I hope this podcast was helpful for you. We haven't been able to touch all the grounds, but yes, at least we have discussed the stock market fundamentals. So this should perhaps get you started. For more on this, we can consider having part 2.
Yes,
we'll have part
sure.
2 for sure.
For
he has
sure.
given his confirmation. All right, so stay tuned, like, share, subscribe, and wait for more. Cheers. Thank you.